Okay, and it's my very great pleasure to welcome our good friend Kwasi Affum along to the panel of all the wise men and ladies. And I can't help but notice just before we get into the sort of meaty stuff that you're sitting there with a keyboard behind you, sir.
Ah, yes, you noticed. Yeah, I mean, before I was locked away in this house, basically permanently, this was my recording studio. So I dabble in a bit of music production when I'm not doing property or finance or banking or any of those stuff. So, but now it's become a home office slash
Absolutely.
studio.
Kind of same here. I'll let you into a little secret. This is my sort of radio studio here. The mixing desk is just off to the left, and that wasn't it. And this is also my kind of little study type area as well. But it's doubling up at the moment. And I think a lot of us are multitasking in our properties, aren't we? And using the same space for different purposes.
Yeah, very much, very much. I think some of us who are lucky enough to have the space are able to use it and repurpose it. I think that's been one of the luxuries for me, at least, of having this space in the first place, because I know I have friends who don't have that luxury, and I have friends who live in flats and have families, and yeah, it's a bit of a different struggle.
Very much so, very much so. But it's interesting to see things crossing over in a sense from the commercial world to the domestic world that we inhabit, because here we have, in a sense, domestically hot desking, isn't it? In a sense, using the same space in different ways.
Yeah, exactly.
Well, it's only the one person using it, but we're putting different hats on.
Yeah, mentally hot desking.
Yes.
Sometimes I'm in here as a worker. Sometimes I'm in here to relax and get away from everything. But yeah, it's about repurposing the space, I guess.
Absolutely. And today we're using our respective spaces as kind of thinking zones. We last chatted just at the end of last year about our thoughts about how Q1 would pan out. Did things proceed rather as you'd expected, would you say? Did you have any surprises?
I think for me, probably the biggest surprise has been how it's surprised and not surprised at the same time, is how well property prices have done consistently. During 2020, you had the period of lockdown, and there was a period where there was zero activity. So it made sense that when it opened, a lot of that pent up demand exploded, and you had, and additionally, a lot of the support measures that the government implemented. And so all of that made sense that it kept the property market propped up. But I think the broader consensus was that that would die away. I think what's been really interesting, both coming out of 2020 and going to 2021, is how that's kept pace. I think this year already, property prices have gone up by 1% in January and February combined. I think they went up by about 0.8% in February alone. So we'll see what the March numbers are like as we get to the end of Q2, the end of Q1 and the start of Q2. But it's interesting that the whole of last year, the average nationally was 8.5%. And so if it keeps the speed of rate of increase keeps going on, who knows, 8% in February, if that keeps up for the rest of the year, we'll already have hit the number we did last year. Not to mention the reopening. So at the moment we have what we call the reflation, the reopening trade. As things begin to open up again, a lot of the demand and the makeup of the economy will change again. You'll have that pent up demand period again. So all of those things could help to prop up the property market further. So I think for me, to answer your question, the surprise has been how well it's done, but also how well it looks to do and how well it'll probably carry on doing, given that a lot of the consensus was around it spiking and then falling away.
Yes, that is what everybody's saying. Of course, we're still benefiting from a longer than expected stamp duty holiday, which is a very welcome thing. But also as well, if we look at commodity prices, you see the difficulties in the supply chain, and not just a ship getting stuck in the Suez Canal. The overall 2020 difficulties that we saw in a world which is in a just-in-time sort of world have led to commodity prices going up. And do you think that could impact on property prices in the sort of medium term as we move forward?
Yeah, I mean, I think what they're saying is we're entering into something known as a commodity super cycle. So we had a relatively low demand in 2020 and actually in the period leading up to 2020 before the pandemic hit. But what we are hearing is that there's likely to be a period of growth in commodities that far outstrips demand, not to mention the supply issues that you mentioned. So we're going to have more demand, more challenges around logistics, things like ships, cargo ships. You need to book these things about 12 months ahead of time. And if we look at where we were this time 12 months ago, there was a very different perception. So all of that is going to flow into the availability of cargo ships in this end of the first quarter, beginning of the second quarter, how that hits supply. So things like that. I think the commodities, and then China is the only country really massively booming right now. And they're going to need a lot of commodities as we get again into the recovery phase and demand comes back into the global economy. You're going to have a lot of demand for raw materials, copper, things like silver, all of these things. So I definitely see a period of growth for commodities, as they say, super cycle as we're entering into in the commodity space. How that impacts properties. I mean, there's two levels to look at this. I always say property is local. Property, they talk about the property market, but there's a series of property markets, and property is really local. So in that sense, there's always going to be the opportunities within the pockets and the opportunities within the various local markets. More broadly, though, obviously property is very resource intensive. It's going to impact things like the copper that you need to do wiring in properties that you do. That's going to impact the prices of those. So the price of the raw materials is definitely going to move its way into the property market from a commodities perspective. I can see that happening.
And then you mentioned just now about property being a local market. So are we seeing some significant demographic shifts? I mean, I saw Daniel Priestley tweeting this morning that a friend of his had been looking at properties, looking to rent a property in London, and after a few tentative inquiries, he was being inundated by agents offering him stuff, and that would mean certainly, you see, the rental market is much more liquid, and that would mean people have already, it's fait accompli, deserted some of the sort of city centre areas en masse. Will they come back?
Great question. So yeah, I agree. I think that in my own property business, what I found, I operate in London, I operate in inner city area, and what I found is that demand fell away massively, sort of towards the third and fourth quarter of last year and coming into the start of this year. Prices, so as a result, there was low demand. That meant that prices went up. Prices went down. You had an oversupply of property on the market, was what I was experiencing personally in my local market. You also had things, as you're saying, that tenants were actually becoming more demanding, and you reduce the price, yet they're asking for more. And I found that. I think what's happening now is that. Also, actually, I should add that the other thing is that I found that there was a lot of serviced accommodation. So obviously, foreign travel's out the picture. Local travel is probably out into the wilderness. I don't think many people are going to urban areas, and as a result, a lot of service accommodation properties came onto the long-term rental market. That meant that the quality of the available properties on the long-term rental market went up almost overnight. So the price has fallen, quality's gone up, demand from tenants has gone down, supply's gone up, and what they want for their price has gone up. So that was broadly my experience, purely on a personal level. You can aggregate that macro and it will be different. I think what you find is that in more urban areas, that was the situation. You had people, a flight to rural areas, places with gardens. I also experienced things like tenants leaving. I do HMOs, so tenants leaving the HMOs to move into studio flats, 1-bedroom flats, paying that slight difference to not be in that social environment, which in the past they would have wanted to be in. But now we're in this era of social distancing. So I think to your point, I think what's happening now is that there is some slow return into some of these markets like Zone 1, Zone 2 London, because the prices have fallen so much that it's now competitive again. So now people are inquiring again. And what's happening is there is still that oversupply. So for every inquiry, they have to compete for that business. The estate agents, the letting agents have to compete for that business from the tenant a lot more. And again, this is all downward pressure on price, even if that demand is slowly but surely coming up. Because in London, at least, the tenants are very savvy, right? So they, the price will go down quickly, but they're not going to be in a rush to pay more. And so I foresee, I think that it's quite downward sticky, and I don't really think that it's going to rise at the same rate in the short term until we get to a point where everything is reopened, we're back to the remnants of the old norm, and most importantly, we start to see foreign travel coming back. Because in our cities in this country, in London, there's a lot of international short-term workers, longer-term workers, economic migrants who have gone back home to Poland. I think I read something like 2.5 million people have gone back to Eastern Europe, for example. So all of that needs to come back, I think, before we start to see a sustained increase in the rent. But before that, what we will see is a return in the demand from tenants, because they see a price point now that's competitive for the first time in a long time.
Yes, I mean you've got this fluidity with rental markets. There's a huge lag, obviously, with property prices, but the rental market is more or less kind of instantaneous. And last year, central Cambridge behaving very much the same as what you're describing there in central London. Very difficult to sell stuff, and voids, like for the first time with having experience in HMOs and single lets here in central Cambridge. Voids for the first time since I started in central Cambridge in 2003, a lack of demand, with a lot of that demand being driven by the university, who said in March or April, was it, of 2020, we're shutting up shop until October of 21. So like that, just in a heartbeat. And that is one of the dangers of basing yourself in a sort of one-horse town, if you like, sort of tenant-wise, because that is the principal demand. Now, when we're talking about, if we're talking about some shipyards or something in the north of England, then okay, they're dependent on their orders, and that can fluctuate. If you're talking about an institution that's more than 800 years old, normally that's a very solid kind of base, and you don't need, although obviously we've got a big hospital here and other things, but you normally wouldn't need that if you've got one client. But that was an instance, another instance in which 2020 tore up the rule book.
Yeah, 100%. But I mean, you say that if you've got one sort of dependency, but to be honest, I don't think that's even, it's just, so I operate in an area where there's a university, Middlesex University, there's a hospital, Northwood Park Hospital, there's the local councils nearby, Harrow Council. So I have a pretty broad tenant type, actually, and I have a mixed tenant. So I have some, normally I think I'll be okay because I'll get some students in there, some nurses, some trainee doctors from the university, and some locals who are working. And that balance has normally done me well. But as we've seen, actually the effects, the university was closed. So the tenant demand went from maybe about 25% of my interest to zero. The hospital staff, the doctors, nurses, we know what they're going through. They didn't really want to be staying in HMOs and sharing houses. They were self-isolating themselves, not to put anyone else at risk. So that demand went overnight. And then the local council, so everybody's working from home now. I had a few people move back home with their parents, So why do you need to pay rent for the next 6 months of lockdown when you can go and live with your parents and not pay any rent? And so even if when you're not exposed to one tenant type, the nature of this pandemic, and actually the fourth tenant type is, I had some which were Eastern European migrants, but again, a lot of them went back home. I've actually had one who went back home and has now come back. Oh. And the room was vacant the whole time. So he's come back into his old room that he was in. He doesn't even need to sign a new tenancy agreement or anything, because he's literally back in the same place. And so, yeah, there's been that fluidity in the market, and it's not just if you're looking at one tenant type that this impacts. It seems that it's been a period of, real volatility. And for me personally, obviously, the nature of that has meant that I've had to re-strategize, reprioritize, and just figure out how I adapt going forward.
Yes. Now, drilling down as we're into this sort of little micro area of your property investments, I'm guessing that you keep them separate. You have the medical staff in this, and the migrant workers in this, and the professionals in that, and sort of keep them apart. Is that correct?
No, actually, I normally mix them. So within a house, I'll have really quite a mixed tenant base, because I operate in a very small area. It's about 20-minute drive from the furthest to the nearest property, and it's about a mile diameter as the crow flies. So broadly, the area has quite a mixed balance of people. It's a really, it's in Harrow. The council area is Harrow. So I think the way that I separated is price, and this draws down to what we're talking about actually. And so I've just sold a house. We completed yesterday, and more to the point is price. So what I have is different properties in different price ranges, as opposed to by different tenant types. So if there's a student or a nurse or whatever, and this is their price bracket, this property is within that price bracket, whereas another property would be in a different price bracket. So that's more how I segregate it.
That's very interesting because I think you're something of a leader, something a market leader. That's a bit groundbreaking, to be honest, because a lot of people, maybe because they've never tried it out, they think, oh well, professionals and nurses will be working on different shifts or something, and they'll annoy each other. I think nobody's ever put it to the test. I haven't. So maybe that's something that people should give a bit more thought to.
I mean, personally, what I find is that it actually gives a bit more balance to the house. So if when they are all doing the same thing, they're all in the house at the same time, or they're all out the house at the same time. Whereas actually, I mean, right now everybody's in the house, but in the past, or what you would tend to find is that there is a bit more fluidity about the house, and there's not everybody doesn't need all the bathrooms at the same time, because some people work late, some people work early, so. And again, like I said, I find that the more distinguishing thing is price. This is more what people are competing on. They want a place that meets their price range, as opposed to a place that's filled with other students. And personally, I found that when I've had, for example, all students in a house, it's been a nightmare. But if I have 1 or 2 students in a house, it's fine. So I'm not keen to have a house full of students, but at the same time, there's a university nearby, and I'm not gonna get rid of that as a tenant base.
See, for you and I, it's probably not that long ago that we were students ourselves, and so we remember the sort of antics that students get up to. So I mean, I've the niche that I've had here in Cambridge is some graduates, and they have to be over 30, and they behave differently from the undergraduates.
Yeah, definitely.
So that works
100%.
if you've got a house full of those guys. But pulling back a bit to the bigger picture, we've had a budget since we last spoke, and we had a lot of rumors and sort of stuff being put out prior to the budget, which probably scared a lot of investors, myself included, prior to that. That has at the very least been pushed forward. So I think everybody breathes something of a sigh of relief there. But what's your perspective from that point of view?
I think the budget was, for me, one of the things that's interesting about Rishi Sunak in particular is that he's very stylish and he's very flash, and he gives a lot of great news all the time. What was interesting to me about the budget is all the stuff that we still continue to kick down the road and what we're not saying. Broadly, the budget was good. I think that the budget positions us that he did think that corporation tax increase. So the tax increases are going to be part of the strategy to come out of this. And it seems like most of that burden is going to be borne by corporations with the increase in corporation tax, even if that means that we're going to reach the highest rate of tax that we've been at for a number of years, I think 25 or 30 odd years. So that's interesting. At least for now, individuals aren't being penalized for this, although he did not lower the threshold for tax. So it's going to hit everyone just a little bit again. But I think all of those are just around the edges, around the margins. It's not necessarily going to reduce the deficit or the debt by a massive amount. And it's also not going to impact people's pockets. I think it seemed from the budget, there was the super deduction, for example, which, again, it seems that they want to encourage spending. They want to encourage people to spend on things like inventory, buying and paying for things that are going to bring in not just additional income, tax revenue, VAT, and things like that. So, and hopefully generate revenue from business. So growth. And I think all of those are good. So, and he extended the stamp duty, which is again good, supporting the property market, keeping property prices booming. There was the 95% mortgages that they introduced, where the bank would subsidize part of the mortgage over 80%, to again encourage more people. I think from a property perspective, the budget was really good. There was lots of measures in there across the board that would help people, not just investors, but first-time buyers. Again, I read that first-time buyers are at the highest level they've been for a very long time, part because they've been able to save more money, young people, by working from home, commuting less, spending less on takeaways and going out. So being able to save more has been good, allowing them to get into the property market and make their purchase. So at the end, and the 95% mortgage helps that. And then there's lots of other measures to help the property market. There's things like shared ownership schemes in more expensive areas, helping people get on the ladder as well. So there's a number of different things, and all of these things are propping up property, creating more demand, allowing the affordability to continue. And I think, again, one of the things from the budget, you have things like furlough. What furlough's done, and other measures, have kept incomes on par with property price rises. So we haven't seen a massive amount of unemployment. Inflation's been relatively low, but wage inflation has actually grown during the pandemic, and in line with property prices. So affordability has been steady. So I think a lot of the measures the government have done have helped that, keep affordability steady, keep people in jobs, keep furlough payments going on, keep businesses open. For the foreseeable future, I don't really see that changing. So yeah, I thought the budget was good for the short term. He did a lot of things that are going to keep the economy moving, as we kind of figure out the next 6 to 9 months or so.
Yes, and you know, as you said at the beginning there, we are kicking the can down the road. So at some point there will be this hour of reckoning, and it will be fairly significant, because chipping away in the background, as we said earlier, we've got rising commodity prices, which are going to, in the wider economy as well, lead to some kind of inflation. Now, traditionally, you know, how do we contain inflation? Well, we push up interest rates, but that's not really on the table, is it?
Yeah, so I think the budget was good for the short term. My concern is more for the long term.
Yes.
And so I think the problem of inflation is going to be a tricky one. We've already seen a lot of asset price inflation. Property prices, stock market, you see where it was almost a year to the week, when everything was at all-time lows, and then in January there were all-time highs. So that's inflationary in itself. I think one of the things as well is that, given the base, if we measure inflation from last year, this point, given where we're coming from, there's a natural effect that it's going to be inflated anyway. So it's going to be almost artificial boost to inflation, plus the real inflation on top of that. I think commodity oil prices, as we get to things like supply issues, demand, that's going to boost inflation up. We're going to get, as demand comes back into the market with the reopening, we're going to get a boost to inflation. More people are going to want food, for example, going out to restaurants. What's going to happen to the price of food as we come out of this crisis, and how, you know, in the short term, I mean, how that affects inflation. So I think in the short term, there's definitely going to be some inflation in the markets. The question is going to be how the government responds to that. And so long as that inflation is accompanied by good quality growth in the economy, hopefully we don't have a problem. The challenge would be that if we have inflation and we have stagnant growth, GDP doesn't grow, or we have negative growth, in fact, as well, and we have things like unemployment creeping into the economy. If businesses that are being kept on life support by government support start to fail, unemployment starts to go up, then we have the problem of inflation, low productivity, low growth. And that's when it's, okay, now what do we do about interest rates? Because I think for the best part, most government, in terms of modern monetary theory, they're looking to deflate away these massive debts that they have.
Yes.
And so, you know, for that to happen, you need to keep interest rates relatively low, while you get some element of inflation. And so your debt repayments stay low while your income grows with GDP, and other asset prices grow as well, allowing you to deflate away the debt. And so the question is, that's going to be possible. How, yeah, I think we're really entering into the kind of crunch phase of all of this. And I guess one point to make, and one really important point, I think, is that UK is in a really good position because of the vaccine rollout. And that puts us at a distinct advantage over Europe in terms of reopening. So the nationalist in me is really happy with that. And I'm really glad that, you know, we've got this one on them. But the business strategist in me knows that this recovery only works if it's consistent across, at least with your nearest trading partner, but more importantly, across the globe, because of exports, imports, etc., raw materials. So actually, on the one hand, us reopening in out of sync with Europe could be good. It actually would be good for things like being able to get commodities ahead of them, being able to UK company stock market valuation will probably be boosted. But in the long run, they are our customers. So us going ahead of them doesn't necessarily benefit us because they're still going to have to wait for them to catch up.
Yes, as again, we're back to supply and demand, because we'll be in a position to supply, but they may not be able to have the demand. Exactly. Now, another way in which COVID has shown us that the world is connected is that, you know, if we in the West eradicate it, but if in some of the third world countries, they haven't had the resources to do that. And we know that this particular virus is very good at mutating. It was in Addenbrooke's Hospital in Cambridge, was it 38 mutations in one patient? And so that is a problem, because our vaccines, all of the ones current in development, although there are some from Imperial and other places that will address this, but they're sort of one-hit wonders in a sense. And we could find ourselves in the autumn with any number of new variants, which just sail through again. But again, you know, if this can jump into pangolins and bats and so forth, then eradicating it is totally out of the question, even if the whole world gets a jab of some sort.
Yeah, 100%. I mean, to be honest, the thing that's interesting to me actually about the virus is the third world, the so-called third world, has dealt with it pretty well. It's been the so-called first world that has struggled. If you look at things like death rates, and when I talk about death rates, I mean excess death rates. So how many more people have died in 2020 than the previous average over the last 5 years? Europe has done much worse than the so-called third world. So that's been really interesting. And you know, raises question around things like why. Even if you look more micro, if you look at Africa as a continent, one of the countries that has done really, really badly is South Africa, which is one of the more well-off countries in Africa. So again, I think there's I don't know, a symptom of something there that is really interesting. The mutations, so far, the two main mutations, if you look at Asia, there's hardly been any mutations that have come out of there in a dangerous way. If you look at Europe, it's been the UK variant and the South Africa variant. All of those have been quite the more nasty ones, despite the fact the tendency of the virus to mutate. So again, those are interesting to me. I think that there's an element of infection rate. So in a lot of the third world countries, the infection rate seems to be quite low. Whether that's because the weather, the climate, exposure to other diseases, existing immunity, existing things for things like Ebola, malaria, whether it's all of those things, but they're able to avoid having a high infection rate, which probably means why they also have a lower death rate. Whereas in the UK, we've had across the whole thing, we've had a pretty high infection rate. The US has had a pretty high infection rate. South Africa had a really high infection rate. So I think one piece is the vaccine rollout, but even with the vaccine rollout, if you have people, 50% who are vaccinated and another 50% who are not vaccinated, but they have a really high infection rate, and this keeps mixing and changing, that's, you know, where the danger really lies in terms of this virus. And I think
Yes.
that's, sorry.
I was going to say, well, so if the variant that we have at the moment is relatively benign compared to some of the others out there, and there's this sense in which viruses compete, don't they? Because I mean, all these anti-vaxxers and conspiracy people are saying, well, where's flu? But when it's a kind of extension of Darwinism, if you like, because when a particular virus is flourishing, the other one, if you like, takes a back seat, and so it's been shown, for instance, that if you have a common cold during the duration of that common cold, it's almost impossible for you to catch COVID. Of course, as soon as you're better, you're vulnerable again.
Yeah.
But viruses are competing just as other species compete. So if we go hell for leather against this particular strain of COVID, there's a sense in which we just might leave the door open for others, for
I
nasty
think
events, as you say.
yeah, I mean, look, viruses are microorganisms. They're alive and they are very simple organisms, but their only purpose is to replicate and survive. And so, yeah, totally. And I think you make a great point when people say, what's happening with flu? I always say that's a bit like asking what's happening with winter in the summertime. They compete with each other. You won't get winter and summer at the same time. So, if flu's being out competed against by another virus, then that's the virus that's going to predominate. And so, yeah, I agree with you, and I think that this is the challenge. So if there's a high infection rate, the virus is competing, the virus is mutating. That's where I see the risk of us regressing. But I think in this country, by hook or by crook, they hedge their bets on the vaccine. They then hedge their bets on having a single dose and extending the second dose. And
Yes.
it's difficult for me to say that they did a good job because we have over 120,000 people dead. We have the highest death rate in any Western world. But as we get to this phase of the virus, I think we can be a bit more confident than we have been in the past about the decisions that we've made. And we can be hopeful that actually we are ahead of the curve for once. I saw a great graph actually. I think it was the infection rates across the life cycle of the virus. And since February, so this is the first time when we're going down and Europe is going up, spiking. Or the whole time through the whole virus, we've been outdoing them in a not very good way. Now we're actually going in different directions, which is in one way impressive, in another way unfortunate, because there's still consequences to all of this.
Yes, I mean, I'm interested in what you were saying earlier about the differences between the so-called first world and the so-called third world. And Africa as a whole has huge advantages because, first of all, fewer processed foods, which really mess up our immune system, and B, a lot more sunshine so that everybody naturally gets a lot of, I don't know about you, but I mean, I'm taking massive doses of vitamin D. I'm taking the maximum recommended daily intake every single day. And that for me is more important, frankly, than vaccination.
So this is a great point you make as well. So one of the things that's interesting is that the virus disproportionately affects people from the BAME community, disproportionately affects Black people in particular. But you touched on this, but actually Black people in the UK and then actually in the West tend to have a vitamin D deficiency because the melanin in the skin blocks the sunlight, which therefore reduces vitamin D creation. So when you think about the fact that the Black people in the West are dying in higher numbers than their counterparts in Africa, that's a very plausible reason. The fact that there they get a lot of more natural food. They don't have McDonald's as much as we do, that's for sure. And on top of that, they get more exercise naturally, and they get vitamin D a lot more. And you won't find someone in Africa with a vitamin D deficiency. Whereas this is, I think, something like 70% of people in this country do.
So, what would be nice to do, I suppose, at this stage then, is to just sum up how we think it's going to go in quarter two.
Yeah, great question. I mean, on a personal level, I'm actually, I think at the moment, I'm a seller in this market. I think when I actually got into property, my plan was never to sell. But having learned and having experienced the last 6 years or so, I'm a seller in this market. And as we were discussing, I'm rebalancing the portfolio and looking at actually where are the opportunities in the next 3 months. So maybe I'll give you an example. So I had a house and it was the first property that I bought in the portfolio as an investment. And now it's a bit dated and needs work. And I had the choice that I can invest some capital in there, maybe spend about 10 grand to do it up and get something like, I don't know, an extra 2 or 3 grand a year out of it, maybe 250 pounds or 300 pounds extra a month. Whereas I could sell it, take that capital and get greater return on that realizable equity that I have in that property. And so that's what I'm actually doing. So I think there are definitely opportunities coming in the next sort of 3 months to 6 months. The market is being buoyed by government support measures, quantitative easing, bond purchases by the government. And so it's a real good opportunity to look. I think things like new builds are going to do really well with the whole 95% mortgage. So yeah, I think there's a great opportunity to kind of reposition and look at the market more broadly and try and see where the opportunities are.
Okay, well, one quick final question for those of us who have withdrawn a bit of money out of the property market for a bit, as have I. What should we do with it in the sort of short term?
That's a great question. It's too bad you asked me that question at the end. I could be here for a while with that. I mean, there's different things. So I think for the safe investor, look, the stock market is looking a bit overheated at the moment. I think that I've actually been looking at the market a lot. There was a period posted sort of in the last 4 weeks where you had things like Apple, Amazon, Tesla, all fall back amazingly. And if you look at things like the price earnings ratio of those companies, they were trading at a massive historic discount. So Apple, I think the stock market had some value in it. I think they're repositioning for the reopening. If you know, it's a really interesting period now to look at that. As we reopen, airlines, travel, cruise companies, the cruise industry, all of these industries are probably going to boom at some point as we reopen. So I think the stock market has some, more broadly, there's crypto. And this is a really interesting space for me. I think that it's a really risky space and people should only enter with both eyes open and then some. But there's great opportunities in that space as well. The market is very mature. Well, I say very mature. The market is a lot more mature now than it was when I started looking at it 5 years ago. So now there's like 5 years of historic data. There's a lot more understanding around its value. There's a lot more trend analysis you can do. So there's that. For me personally, more recently, where I've been spending a lot of my time and probably burning too much money is in a space called NFTs. Now, NFTs are non-fungible tokens, and it's a type of crypto asset. And I've been exploring this and looking at ways to, well, make money, but also lose money because it's a very nascent space. And it reminds me of Bitcoin circa 2015. And yeah, I'm a bit of an early adopter. So I think if you've got cash on the sidelines, you know, cash is itself is not really doing anything. You can find ETFs, exchange traded funds, index funds, they'll probably do more. And then separately, if you're a risk taker like me, there are some really interesting risky bets in the market right now. You may have seen, but Beeple sold an NFT for just a few million recently.
Yes, and on that note, we'll leave it. Suffice it to say that obviously we're just having a sort of intellectual chat here. We're not offering investment advice. Kwasi, thank you so much for your company today, and I'm looking forward so much to revisiting this in 3 months' time.
Thank you very much. Thank you for having me, and I look forward to seeing you too.